all this semiconductor industry may be affected by the policies about China if, let's say, Donald Trump win the election during the November election in the US. So as an investor, you may need to take note of that. And if, let's say, you have a lot of semiconductor stocks in your portfolio, you may need to be more cautious. It's end of the month again, and welcome to our monthly market update for Busy People series, where we will get you up to date with the stock market while you are having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. Just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor and we do not manage customers' funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way, you have a better control over your decisions and be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. All right, so let's start the timer. All right, as usual, let's start with the market highlight first. So let's take a look on what happened in the stock market over the past month for the month of October. So for the indices in the US, like SPY, which represent the top 500 stocks in United States, and also the QQQ, the ETF that represents the Nasdaq 100, hovers near the all-time high while waiting the tech earnings and also US election. So we are ahead of these tech earnings and also US election, and the stock market now hovering near the all-time high. And we need to be cautious. So as an investor or traders, we need to be cautious near major resistance. For example, the all-time high resistance for the QQQ, or when the market near all-time high, when things get expensive, we may need to be more cautious, or more cautious when we are buying share, or more cautious when we are allocating our portfolio. And if you have positions that are already deep in profits and the stock getting more expensive, you may consider some partial profits and so on. So this is what I meant by cautious. And the semiconductor industry, which are involved like the stocks like Nvidia, AMD, or even Intel, all this semiconductor industry may be affected by the policies about China if, let's say, Donald Trump win the election during the November election in the US. So as an investor, you may need to take note of that. And if, let's say, you have a lot of semiconductor stocks in your portfolio, you may need to be more cautious ahead of the election. And also at the same time, this week we have tech earnings. So how many of you are monitoring the US stock market? So what are the famous names that are going to announce earnings this week? If, let's say, you are aware of it, you may type in the chat as well. All right, so for the tech earnings, this week we have a few companies that are announcing the earnings. So from here, let me share you the dates of all those earnings. So we have Google announcing earnings tonight after the market close, and Visa also announcing earnings. And somehow next tomorrow we have Microsoft and Meta, and 31st October we have MasterCard, Amazon, and also Apple. So from here we can see that a lot of tech companies are announcing earnings. And this may cause volatility in the market, especially if, let's say, they announce earnings that are below expectations. And with the AI companies has been spending a lot of money, CapEx spending, capital expenditure, spending a lot of money in the infrastructure section, which means like in the past, you can see that Microsoft, Meta, Google, and even Amazon invested a lot of money in the infrastructure side of AI, which means that they invested a lot in GPU, they invested a lot in the server computing and so on, and the data center as well. So now a lot of earnings expectations are whether they're able to monetize all this investment from their AI product services. For example, whether Microsoft can make money from their Copilot, whether Google can make money from their Gemini AI, whether Meta are making money via their AI services and so on. So during the earnings, you may watch out all this, and if the forecast or the outlook is not that good, it may cause gap down. Gap down, which means that the market sell off after the earnings session during the post-market hours. So you may need to watch out if you are holding tech stocks, because now the focus will be, other than AI investment itself, more focus will be more on whether they are profitable via their AI investment, whether they are profits from the AI investment, because they have been investing in the past 2 years. So now the expectation changes from the investors. They may want to look at the returns as well. You invested so much money, capital spending in all this infrastructure, and whether now you are getting returns from them or not via your AI services. All right, so this is the major topics to look out during the earnings. And also, we have US election on 5th of November, and this will be decide whether either Kamala Harris or Donald Trump going to be the next president for United States. And for Donald Trump, it will be more volatile for the market because Donald Trump's mentioned about he want to tariff every country in the world, and also heavy tariff on China. So with Donald Trump around, it may create more uncertainties to the stock market. And also at the same time, even though home builders, sector that's supposed to be beneficial from both a Trump win or Kamala win, may be affected by a Trump win as well, because Donald Trump said that he wants to deport immigrants back to their origin. Means if you want to deport immigrants, and if you deporting too many immigrants, it may cause the home builders having issue, having labor issue, having manpower issues to complete their projects. So I would say, if let's say Donald Trump wins, more uncertainties in the market, we may see more volatile market. And if Kamala wins, things may get more stable. But usually, based on the past data, before election, usually there will be some volatility. And after election, if let's say you see some volatility as well, some pullback as well, it's actually a good opportunity for you, because most of the time, stock market go into bull market once the uncertainty settle down, which means that usually after election, there will be likely be a bull market continue on. So take note of that. And so after I share so many information about the SPY and QQQ, let's see as an investors or traders what we can do or how we can react. So first of all, we do see that volatility ahead. We are ahead, 1 week ahead of all these major events. Tonight onwards, we have all these major tech-heavy earnings throughout the weeks. And next week, we have the US election. So we do see that volatility is ahead. So as an investor, during this period, you may remain cautious, avoid adding too much position ahead of all these significant events. All right, if you are already invested in the past, you may consider taking some partial profits. If let's say your position already deep in profits and the stock you are holding already overvalued or in a very high valuation level. All right, and you need to be disciplined regarding your portfolio exposure. Do not overexpose in a single sector or a single industry, because if let's say you are too heavy semicon invested, then if Donald Trump wins, your account or your portfolio may get more volatile. So this one something to take note for investors. You need to remain disciplined, make sure your portfolio are balanced. And if let's say you have position that are too expensive already, very stretched level or already very high valuation, you can consider partial profit so that you can have cash on hand in case market pullback. You can continue to add position, or you can take the opportunity to add more shares when the market pull back overall. All right, so this is for investors. What about traders? Traders, you may consider partial profits near the major resistance. Like for example, triple Q near the 500 major resistance now, which is an all-time high. So as a trader, if let's say you have positions for your swing trading or trend trading, you may consider some partial profits of your position so that you can lock in some profits ahead of all these uncertain events. All right, so this is to lock in some profits. And as a trader, you can also trade the post-election reaction. For example, after the election, maybe you see some pullback or some volatility happens. And somehow the stocks you are watching come back to a strong support or come back to a setup which fulfill your trading criteria. And then you can take opportunity to trade this post-election or post-election price reaction to the stock chart itself. However, having said that there will be volatility, potential there might be a pullback, investor or traders may take this opportunity of the volatility to get in the positions or get in the stocks you has been long studied. For example, if you, as an investor, if you see some potential setup or potential good companies, you may take these opportunities of the market correction or the pullback because of some volatility during the election period to get in the investment you long waiting for. All right, so I would say that this week need to be cautious, but because we are ahead of a major event. But once the major events pass, you may look out for opportunities, because most of the time the market will follow through with a bull market after election based on the past data. So the probability of a bull market is probability of a success for your investor is investment are quite high, because based on the past data, usually after the election, market may be pullback and volatile a while, but once things are settled down, more certainty in the market, the stock market likely will take off after that. Okay, after going through the high level overview, let's take a look on the stock market performance among different countries. So let's start with the Nasdaq 100 first. So the Nasdaq 100 are tracking the top 100 tech stocks in the US. And you can see from the charts over the past 10 years, the return are the highest, average, and also the most past 10-year return. And now Nasdaq at the all-time high again, ahead of the election and also heavy tech earnings. So we are still in the bull market right now, just that we have some significant event ahead. And if let's say there's uncertainties, market may pull back to a level which we may take this opportunity to get in. All right, so we do expect that market now near all-time high resistance, and we are ahead of an important event, which is US election. And also these few days we have major tech earnings. So it's best to be cautious for this week. And once the election's over, heavy tech earnings over, you may reevaluate the market and time it using the stock charts to get in, take the opportunity of the volatility to get in. And based on what we observe also in the US, we have the most quality companies. So what it means by quality companies, which means that we have a lot of well-run companies. For example, we have a lot of global brands or a lot of MNC which are listed in the US. And for S&P 500, you can also see that the returns are quite high over the years, 200% over the 10 years and 21% average over the past 10 years. And it's also tracking the top 500 United States stocks. And this one mostly the top 500 biggest companies in US, and majority of them are tech stocks, but we do have some non-tech as well. So if let's say you see both S&P 500 and Nasdaq are going up, it means that the overall United States stock market are doing well, and they are now still in the bull market. And based on our studies, also the recent jobs data and also GDP are still healthy. So US economy are still quite resilient. All right, next one, let's move on to China. So China in this year has been having, in the past few years, having some crises. So anyone of you that follow the China stock market, you may share what are the crises happen in China stock market. Anyone focus on or monitoring the China stock market? Yes, China in the past having some housing crisis, property crisis, and also at the same time, their economy are slowing down. Foreign funds are moving out from China, and because of foreign funds are moving out, factories are moving out, the jobs market are also quite soft in China. People are losing their jobs, and yet they need to pay their housing, because housing, as we know, housing price in China are quite high, and China people like to invest in property. Hence, it creates effects whereby housing market are slowing down, property are having a crisis, and at the same time, their job markets are quite weak, and foreign factories are moving out. When foreign factories moving out, as we know, China is relying on a lot of manufacturing. Hence, there are also a lot of issues, and the consumer market actually slowing down. Hence, the overall economy in China has been slowing down over the past 2 years, and you can see that their stock market also in a bear market, and also at the same time, the economy are slow. All right, and consumer sentiments are weak. And recently, during mid-September, during mid to late September, the government in China actually launches a major stimulus. So why they need to launch a significant stimulus, which is one of the largest in the recent history, is because they want to recover the economy. They do their best effort to recover the economy because the economy has been slowing down. So the China government want to introduce stimulus package to recover the economy. And this package of stimulus not only cover the housing market, they also cover the stock market and also the job market. They are actually encouraging their state-owned enterprise, which is the government-linked companies, to hire more people as well. And at the same time, they issue trillions of dollars to stock market to buy back the company share, and also provide loans for company to having some share buybacks. And for the housing market, they actually cutting their interest rates and also loosening some of the criteria for second home buyer and also first-time home buyers. And with that big package of stimulus coming in, it actually moved the China stock market. The China stock market moved up by around 30% within 2 weeks. But currently, after the rally to the peak, it pulled back more than around 40 to 50%. This is because it's due to the lack of follow-through for all these stimulus package. During the initial announcement, they announced a lot of package, but over the last few weeks, there are not much follow-up from the authority or the government or the central bank itself. Hence, we can see that the market currently having some strong rally. After that, currently having a pullback and waiting for further news or further follow-through from the authority or from the government itself. Hence, I would say China market itself still very volatile for now. And let's take a look on Hong Kong market. So Hong Kong market also heavily affected by China market because Hong Kong economy are quite related to China. And at the same time, Hong Kong market also exposed to the US market. And the chart does show similar relationship. You can see that from the chart over the past few years, when China are slowing down, Hong Kong also slowing down as well. And at the same time, you can see that when US market having some correction, Hong Kong market also affected. So from the observation here, we can see that both China and also Hong Kong market are highly affected by the government, especially Hong Kong market itself, heavily affected by China market. And what we also, based on our study, what we also notice is China markets are more retail traders as compared to institution investor, which means that more retail traders like us in China, rather than the ratio in China market is like more retail traders like normal traders like us versus institution, whereby it's the big funds and so on. As compared to the US, US are majority are institutional investor, which is majority are big funds, while retail traders carry smaller ratio. But it was an inverse relationship in China, whereby we see more retail traders and lesser institution investor. So what does it mean? It means that the buy and sell are more irrational, because retail traders, as we know, some are more irrational, especially the Chinese community in China. All right, a lot of them are just treating the stock market like casinos. Some of the unmature investor. Hence, you can see the market itself by nature are more volatile. People tends to buy and sell just because of some news and so on. And other than that, China market also highly affected by the government. For example, the government can anytime implement some policies to discipline all those mega cap companies. Like for example, how many of you heard of the China government take action against Alibaba and so Tencent a few years back? You may type me in the chat if you heard of the news before. Yes. So in China market, it's actually quite heavily influenced by the government. Government can actually audit or anytime take action against firms if they are already in a dominating position. For example, Alibaba in the past few years, there has been a dominant player in their segment. And in order to keep the segment having some fair competition, the government actually take action against Alibaba. And also at the same time take action against Tencent and so on. So it was a highly influenced by government's market. So it's not a good place for long-term investor. You can expose some of your position in China, but in order for you to hold long terms, I would say we need a stable and more predictable market, just like the US market, rather than heavily too focused on China, because China can be affected by government easily. All these great companies in China can be easily affected by the government. Hence, it's not a good market for long-term investing. However, as a traders, you can still trade the Hong Kong market, but I would say you need to limit your exposure in this China market because of a more volatile situation and more volatile market. Hence, US still a more predictable market. And lastly, let's cover somewhere near our region, which is Malaysia, which our company comes from, Malaysia. So let's take a look on the FTSE Bursa KLCI. So KLCI has been in an uptrend early this year, recovered into an uptrend. Over the past few years, KLCI was slow because of we have been changing prime minister over the past few years, and the political situation was quite unstable in the past. Hence, foreign funds does not favors Malaysia. And that time also we have ringgit weakening issues. And during early this year, the stock market in Malaysia actually recovered into an uptrend. And now actually the momentum slowing down, and we may go into a sideways market for a while until the foreign funds coming back. And as an investor or traders, what are the crucial factors that moving the Malaysia stock market? So Malaysia stock market or Malaysia economy actually relies on a few key factors. For example, that we need a stable government, and also at the same time, small nations like Malaysia actually rely quite heavily on foreign investment. So currently, the dollars, so indirectly also we can say that because we rely on foreign investment, we also quite closely link with the US dollar direction, which means that either a stronger dollar or a weakening dollars. So like I mentioned earlier, why early this year, we are having a bull market in Malaysia is because foreign funds are flowing in as well. And that time we have a weaker dollars, and recently dollars actually turned around, and now we have a stronger dollars. Hence, foreign funds may not be coming in a short term for now after coming in early this year. And at the same time, since Malaysia market already rallied a lot, it may take some time to go into sideways consolidation before there are more catalysts or more fundamentally supported factors that bring the foreign funds back in. All right, so having said that, the market moving in a sideways, Malaysia still have some fundamentally strong companies, especially those companies that are benefited from the Singapore's national AI strategy. So why Singapore national AI strategy is because Singapore has been invested a lot in AI, and they want to be one of the top AI nations. However, as we know, if let's say you invested in AI, you invest heavily in AI, usually what are the resources you need for all this AI deployment? Any one of you from IT, if let's say you want to set up an AI infrastructure, what do you need? All right, so as usual, when you're setting up an AI infrastructure, you need data center, you need powerful graphics card, GPU, and also you need a powerful computer. And all of these, you need land, you need power, you need water. And as we know, Singapore is an island. Hence, in order to build data center, all these, they actually need to build data center in the neighboring countries because of lack of lands and also lack of power supplies. So we can see that Malaysia actually benefiting from it. Data center investment in Malaysia has been going up. A lot of foreign firms are coming into Malaysia to set up data center because Malaysia, we have plenty of power, plenty of other utilities like water, power, and also at the same time, we have enough land. Hence, you can see that in Johor, there are a lot of data centers setting up, and also in Selangor regions, there are a lot of data centers are coming in and setting up. Hence, this indirectly benefited the Malaysia company as well, especially those companies that are coming from power utilities, water utilities, and also constructions. All right, and other than that, what we noticed also recently, our local banks has been performed strongly as well. So banking sector also is one of the sector to watch out for if you are invested in Malaysia or you are interested in Malaysia market. So from the overall comparison from these stock charts, which market provide you the most consistent return? You may type in the chat, be it US, China, or Hang Seng, or Malaysia. You may type in the chat. Yes, US market is the one that providing the most consistent return. So for investors or traders who are looking for high growth, we may focus on the US market because US market still have the most high growth companies, have the most strong drivers. For example, what are the strong drivers that affecting the recent stock markets are those related to AI, cloud computing, and also fintech. So you can see that US market over the past years has been providing the most consistent returns because there are a lot of well-run companies in the US. And other than that, they also having a lot of high growth companies, and most of the strong drivers actually are pioneered from the US companies as well. Right, and talking about industry trends, we see that AI, cloud computing, and fintech, also all of these are leading by all these US companies. So any of you, or how many of you heard of any AI or cloud computing company names you heard from the United States? You may type in the chat as well what companies or what AI companies you heard about listed in the US market one. All right, so usually we have NVIDIA, we have Microsoft, we have Google, we have Amazon. All these big names, I believe most of you heard all these big names before, and some of you actually using their products as well. So we can see that companies in the US having higher earnings growth and also provide more predictable returns. All right, so other than all these factors, on top of that, we also have a lot of money on the sidelines. So currently there are around $6.5 trillion of cash in the money market. All right, so what is a money market? Money market actually is a fixed income asset that work like our FD. So usually the funds, when all these big funds are holding cash, they will park their money in the money market funds to earn the interest rate. Just like how we park our savings in fixed deposit rate. All right, so we have a monthly fixed deposit, we have a 6 month, we have a 3 months, we have 1 year. So same for money market. Money market, you have is a short-term kind of FD where funds will park their money in and they may get overnight returns or over the month's return. All right, so this is how they park their money in the money market funds and earn all this interest rate. And one of the key reasons why all these investors are stocking up cash is to take advantage of the risk-free rate. So as we know, currently the US market are having, in the US, there are 5% interest rate now. So if let's say you park your money in the US dollars, you are actually getting 5% of interest rate as compared to you park in other region where you only get 2 to 3% or maybe 4%. And if let's say the 5% risk-free rate is quite high as compared to invested in the stock market already. So in this case, a lot of funds actually parking their money in cash. And with the start of rate cut, also recently Fed has been cutting the interest rate since the last FOMC. So when the rate cut starts, some of this cash may rotate into other risk asset or other assets. So this massive 6.5 trillion pound of cash may act as a fuel to the next bull market. So once we are finished with the rate cut, once we are finished with the elections, they may rotate into risk asset, for example, like stock market, like the crypto market, or even the bonds market. So we may need to observe this asset rotation as things unfold. All right, so after I presented the market overview, I presented the stock chart performance, and also at the same time talking about other factors like the 6.5 trillion cash in the money market. Let's take a look on coming ahead, going forward, what are the risks and also opportunities out there. And as an investor that are responsible for our own money and also our own risk management, we always start with the risk first. We evaluate the risk first before we take a look on opportunities, so we can balance these two together. So first of all, let's take a look on the risk itself. The first risk we need to watch out for is the inflation trend. So we know that in the past years, inflation has been high in the US, Europe region, and also the UK region. And inflation has been slow in the China region, very slow because of the economic crisis. The inflation in China only around 0.5% if I not remember wrongly. So China actually having a weaker consumer sentiment. While against the US has been recovering from a strong inflation, and Japan is about to having an inflation trending up, and Europe also same like US, recover from a strong inflation. Hence, we may need to still monitor the inflation trend. If US inflation continue to trend down and the Fed continue to cut interest rate, which will be good for the US stock market. But also we need to watch out the China region because China, as we know, is the second biggest economy as well. So if China slow down, it may affect the world economy as well. Hence, we want the China inflation to go up while the US inflation are coming down. This is what we want to monitor. And next one will be the slower global growth. So China, like I mentioned earlier, has been in the crisis, and recently they introduced the stimulus. So whether the stimulus able to recover the economy, we may need to continue to monitor, and whether there's any follow-up plan for the stimulus itself, any more follow-up action by the government, any more follow-up action by the by the Central Bank of China. So this one also important to watch out for. And Europe and UK, we know that they are having low GDP growth in the past, and even ECB themselves also mentioned about European Central Bank, actually mentioned about a slower growth for 2024 as well. Hence, we know that Europe region are slowing down. And the other risk will be lower earnings forecast as well, because of, like I mentioned earlier, all these AI companies has been invested heavily in all this hardware, all these graphics card, data center, and so on. So now the expectation for the investor will be whether you can make money via all these AI services. Hence, you may see time to time company lowering their earnings because of the overspend in their infrastructure side. So this one may need to look out for, need to monitor as well. And lastly, will be the US unemployment trend or the recession concern. For this part, for temporary is reduce the risk already because of the employment has been recovering in US. The past 2 jobs data has been strong. And the third risk factors will be geopolitical tension. As we know, nowadays we have China-Taiwan China-Taiwan and US relationship in the Asia region. And at the same time, at the Middle East, we have the Israel, Iran, and also Lebanon and Hamas tension. And in the Europe, we have this Ukraine and Russia war. So geopolitical tension has been going on for a while, and also the tech war between US and China. But most of the market already factor in unless we have new development or situation escalates. So as an investor, we may need to watch out for all this geopolitical tension as well. But some of the events already factor in the market. Hence, you can see that US still in a bull market. And the next one is US election. Like I mentioned, 5th November. So this one important event to look out for because new president may introduce new policies. So we may need to watch out that. And the foreign policies will be different. The local economic policies will be different, depends on the president. And lastly, the last risk we need to watch out for will be potential slower rate cut. As we know, during the last FOMC, the Fed has been cutting 0.5% interest rate. But market overall expect there are another 0.5, two more 0.5 rate cut, while in their terminal rate also people are still foresee another 0.5% to cut. However, with the current inflation situations, some rebound, and also market looks like people are factoring a Donald Trump wins, and market also look good at Donald Trump. So we can see that finance sector has been rallying, and also at the same time the treasury yield rate has been going up. So this one may cause speculation about a potential slower rate cut from the Fed if let's say inflation rebound after a Donald Trump win or other factors. So these are the potential risks we need to watch out for from the stock market itself. So after cover all the risks, let's take a look on the opportunities. So opportunities will be those mega trends, those industries that are in line with mega trends. For example, artificial intelligence, AI, cloud computing, big data, fintech, and also next gen broadband, 5G or 6G, or even in future maybe 7G. So all these mega trends are here to stay, right? We are moving towards AI era. So the growth for this industry likely will be there for a few years. Same for the cloud computing. With transition to AI, you need more cloud computing. Same for big data as well. As we know, data is the fuel for AI. All right, so all these are to stay. So all these companies in this industry likely will be beneficial from all these mega trends. And same time, we have fintech as well, financial technology, fintech, and also the next gen broadband. For example, the 5G, 6G, and other than that is the clean energy itself as well. So all these mega trends are here to stay. And another potential catalyst will be upgrade cycle. So as we know, in the past, during 2020, a lot of us upgraded our laptops and also computers. And now we are at the 5 years or 5 years checkpoint. So if you count from 2020 until 2025, we are now at the third half or third quarter of 2024. So if let's say, usually our upgrade cycle will be 4 to 5 years to upgrade a laptop or smartphone. And this now we do see a lot of AI-driven devices in the market already. For example, AI smartphone, AI laptop, AI tablets, or AI-related wearables. So all of these, if let's say consumer sentiment improve, if let's say the rate cut happens and household has more disposable income already after the rate cut, then the consumer sentiment may recover and people may upgrade their smartphone, laptops, and so on. And this may benefit all these electronics company, for example, those that selling consumer electronics devices like smartphone, laptops, and tablets, and so on. And other than that, will be the sectors that are benefited from the favored presidential candidates. So here I will post a link in the chat, which there's a video by Kathleen, our founder, about mentioned about US election. Right, so let me send to everyone here in the chat. So you may watch these videos for a comprehensive updates about US election. So for here, I will quickly cover through. So like I mentioned earlier, housing market will be the one that likely neutral from the election itself, because be it Kamala Harris or Donald Trump, housing market likely will be benefit. But based on the recent news, housing market may be negatively affected by a Trump win because he want to deport a lot of immigrants back to the origin. And this may affect the housing market because, as we know, housing market need laborers to build house. All right, so if you deport a lot of immigrants, this may cause problem for the housing market companies, home builders companies. And also at the same time, Donald Trump may cause volatility in the semicon industry. But the positive side will be if Donald Trump win, then the financial sector likely will be beneficial. I repeat again, financial sectors, because he wants to deregulate the banking system in the US. All right, means loosening the regulation. While other than Trump, so if let's say Kamala wins, things may get more stable. All right, he may continue what Biden's continue on with. So all these tech companies will be much more stable under Kamala Harris, and also the semicon sector will be more stable under Kamala Harris. And the third opportunities will be companies that has demonstrated resilience to slower consumer spending. So as we know, in the past, we are in a rate hike cycle and consumer sentiment has been coming down. And also at the same time, with the slowing down in China economy, retails are also slowing down as well, because as we know, China is the second biggest economy in the world. So we may need to select those companies that shown resilience during the slower consumer spending. Best if those companies are having lesser exposure to China. This is because just in case Donald Trump wins, they may implement more tariff or sanction to China, or also just in case if Kamala Harris win, they may time to time also implement tariff to China because of the fair trade policies. So with these two presidents likely to still tariff China and so on, and with the US relationship with China still in a more tension mode, if you select a company, you may select those less exposed to China, which means that their revenue less rely on China market. And at the same time, because of the potential slower rate cut, which is at the higher interest rate, a low debt company, which is good as well, because if you have lower debt, you may need to pay less interest. And also at the same time, companies with strong cash flow and strong cash position also important. So those with net cash, companies with net cash, no debt one, that will be the best case. And also best if their revenue exposure are mostly from the US itself. And lastly will be companies that are benefited from the rate cut. So as we know, home builders, small caps, finance sectors, and also consumer discretionary and travel companies has been quite sensitive to the interest rate. And if let's say we're having a rate cut cycle, you may focus on all these industries. And something to bring out is travel related as well. Travel industry has been recovered strongly recently. You can see that some of the airlines and the cruise ship companies has been doing well. Same for credit card companies like Visa and Master. So you may continue to monitor this segment as well, or these industries as well. All right, so having said that, we have so many opportunity and risks. I would say that in summary, the opportunities still outweigh the risk. You can see that there are plenty of opportunities in the market, and when the things are stabilized after the election, you may see a bullish market when everything settled down. Like for example, after election, all the uncertainties goes and funds are coming back in, then you can see that we may continue with a bull market. And this is the best time for you to take the opportunity of the volatility to get in the stocks that are showing good valuations or strong fundamentals. Or if you are traders, it's the time for you to get in during the pullback. And this is the best time to prepare yourself with the right knowledge. All right, and some announcement here is during January 2025, around 18 January 2025, we are having a Beyond Insights Symposium in Nexus Bangsa South. So you may click on the link if you are interested. So what are these events about? What is this events about is we will share about, we will show you about the megatrends. We have all this AI, big data, clean energy, 5G, next gen broadband, fintech megatrends. So all of these topics will be covered and help you to navigate through the megatrends during this talk. And also at the same time, we will provide some market outlook. And also we do invite some of the industry experts to this symposium to provide some insights from their own industry. So you may listen, you may hear from all these industry experts as well during this symposium. So if you are interested in these events, you may click on the link we just posted in the chat and you can register for the events. All right, so with that, let me open the floor for Q&A. So any question you would like to ask me, you may type in the chat. All right, so I see one question here earlier on one. So the question is, if Trump wins, possible the money market interest remain higher longer. All right, so how does it play out is people do factor there might be a higher inflation if Donald Trump wins. Why? Because Donald Trump mentioned about he want to impose a tariff across the world for 10%, and in China, if I not remember, it's 60% for China. So if let's say tariff has been introduced to all these imported goods, what do you think will happen to the inflation? Do consumers need to pay higher price for the item they buy, for the imported items they buy? You may type in the chat. All right, usually will be higher. All right, you need to pay higher price because of all these tariff. Usually the tax will be transferred to the consumer. Hence, people see a higher inflation. And with higher inflation, what do you think the Fed will do? Likely will pause the rate cut. And if let's say the Fed slow down the rate cut or pause the rate cut, then the interest rate may remain high. and the interest rate in the money market may remain higher. Hence, you can see that recently, actually, the market having similar movement. Market do anticipate a Trump win. If you monitor the financial sector, if you monitor the treasury yield, actually these two are pointing towards a Trump favored market. All right, so this is why it explained that under Donald Trump, inflation might be higher, hence the interest rate might remain higher. All right, and I see second question about I invested in China market since 2021. Should I continue to hold until next market stimulus come in or leave China market? All right, so we are not an investment advisor. So yeah, in the past, China market has been in a great valuations, but because of the economic crisis, it has been slowing down. You may monitor whether once the stimulus come in, any follow through or not, which means that coming few months, for example, let's say I think mid or late November or mid-November, there will be some China policy meeting in China. And usually what I notice, they like to time the stimulus together with the Fed. Because China also don't want the renminbi to be weakened too fast against the dollar. So they also want to see what the US Central Bank do first before they decide the stimulus. So the next FOMC will be crucial because once FOMC announce, depends on what they announce, China may adjust their policies or their stimulus accordingly because they don't want the renminbi to be weakened too fast because of all these stimulus. So China also want to monitor the world and want to sustain their renminbi valuation. All right, so you may need to watch out whether the follow-throughs come or not. But I would say, as an investor, it's best for us to diversify among different markets, which means that you may diversify some in China, some in US, and some in Malaysia. But personally, I would say US still provide the most consistent return. Hence, your portfolio can construct around whereby you have a more heavy US exposure, but you also balance it up with some China stocks and also Malaysia stocks. So I cannot give you an exact action of whether to buy and sell. I'm not entitled to that because we are just educational institution. But you can consider some of the balancing and also some of the information here. All right. And lastly will be after the election, what is the direction for gold? All right. I don't have a crystal ball where the gold will be heading. But for gold, gold itself is a very unique instrument whereby it don't have a fundamental value to support it. All right. It's just commodities triggered by supply and demand. But if let's say there is a geopolitical tension, gold tends to rally. And with the world currently having such three events, for example, like I mentioned just now, US, China, Taiwan, Russia, Ukraine, and also Middle East, gold is one of the good tools to hedge against the geopolitical tension. And also potentially, if let's say you are concerned about all this US debt, for example, US debt has been sky high, you know that the deficit they are in a high deficit, plus the US having a huge debt. And next year January, we have a deadline for their debt ceiling as well. So if let's say you want to hedge against the depreciation of dollars or you're concerned about all this US debt, all this geopolitical tension, you can allocate a small portion of your portfolio to expose to gold, but not as your main investment for gold. So I would say gold potentially may still see room to going up if let's say after the election we see more uncertainties. So usually when you see uncertainties market, uncertainty events on geopolitical tension or uncertainty in terms of the presidential election, gold will be the one that potentially may rally. So you may still monitor the gold market. All right, so gold still have some tailwinds with it, some good factor with it, and it may continue its rally. But this is just my opinion. I don't have a crystal ball to predict the future, so you may need to react accordingly. All right, so hope I answered your questions. And with that, I think we are way over time. We are at 1:13 now. So if you find this market update useful for you, do share it with your friends. And I'll see you guys during the next month market update again. And hopefully most of you will register for this symposium as well. So hope to see most of you in the symposium as well. All right, with that, that will be the end for today's market update. Hope you all trade well and also have a good day. All right, so bye-bye.